In 1991, the largest banking scandal in human history exploded across the global stage. A financial empire operating in 73 countries collapsed overnight in coordinated raids that would expose a criminal conspiracy so vast, so intricate, that investigators are still uncovering its secrets decades later. This is the story of the Bank of Credit and Commerce International, BCCI, a institution that the CIA itself nicknamed the Bank of Crooks and Criminals. What began as a promising third-world banking venture transformed into the world's most sophisticated money laundering operation, serving dictators, drug cartels, terrorists, and intelligence agencies. Behind closed doors, BCCI facilitated arms trafficking, nuclear technology sales, bribery on a massive scale, and financial crimes that defied imagination. When the truth finally emerged, $20 billion had vanished, and the financial lives of over 1 million depositors lay in ruins. This is not just a story about banking fraud. This is a story about how one man's vision created a global criminal enterprise that corrupted governments, manipulated financial markets, and operated above the law for nearly 2 decades. Welcome to the twisted world of BCCI, where nothing was as it seemed and everyone had something to hide. The story begins in 1972 with a Pakistani banker named Agha Hasan Abedi. Charismatic, ambitious, and deeply connected to Middle Eastern royalty, Abedi harbored a revolutionary vision to create the first truly global bank for the developing world. Unlike Western financial institutions that dominated international banking, Abedi promised to serve the excluded, the overlooked, and the ambitious entrepreneurs of Asia, Africa, and Latin America. Abedi's philosophy was deceptively simple, yet profoundly dangerous. As former BCCI officers would later reveal, he had a saying that defined his entire approach to business: "The only laws that are permanent are the laws of nature. Everything else is flexible." This wasn't just corporate philosophy, it was a blueprint for systematic criminality. From its founding, BCCI was structured to evade regulation and government oversight. Abedi deliberately created a labyrinthine corporate structure, shell companies within shell companies, nominees hiding the real owners, banks within banks, operating in complete secrecy. The bank was incorporated in Luxembourg but headquartered in Pakistan, with major operations in London and the Cayman Islands. No single regulator could see the complete picture. Throughout the 1,970 seconds and early 1,980 seconds, BCCI grew at an astonishing rate. The bank opened branches in capitals across the globe, from London to Abu Dhabi, from Hong Kong to Panama City. Its client list read like a directory of the world's elite: Middle Eastern royalty, African heads of state, Latin American power brokers, and Asian business magnates. But beneath the surface of this spectacular growth lay a disturbing reality. BCCI was, from its inception, a Ponzi scheme. The bank had never been adequately capitalized. While BCCI claimed that oil-rich Arab leaders had invested hundreds of millions as shareholders, the truth was far different. Most were merely nominees, lending their prestigious names to create an illusion of stability while contributing little or no actual capital at risk. To maintain the illusion of profitability and solvency, BCCI needed constant deposits, fresh money flowing in to pay earlier obligations and operating expenses. This created a frenzied, desperate culture within the bank where asset growth became the only priority. Abedi pushed his officers relentlessly: generate deposits at any cost, from anyone, by any means necessary. By the early 1,980 seconds, BCCI had caught the attention of American intelligence agencies. The bank operated in regions of intense strategic interest: the Middle East, Pakistan, Afghanistan. When Saudi intelligence chief Kamal Adham and his successor Abdul Rauf Khalil became major BCCI shareholders and frontmen, the connections between BCCI and Western intelligence deepened. The CIA began using BCCI for intelligence operations, maintaining accounts at BCCI branches, and allegedly channeling funds through BCCI's Pakistan headquarters to support the Afghan Mujahideen fighting Soviet forces. The relationship was mutually beneficial. BCCI gained protection and legitimacy, while intelligence agencies gained a discrete financial channel operating in strategic locations. But this relationship would later become one of the most controversial aspects of the scandal. How much did the CIA know about BCCI's criminal activities? And did intelligence connections shield the bank from earlier investigation? These questions would haunt the scandal for decades. By the mid-1982s, BCCI had evolved into what prosecutors would later describe as a full-service bank in the worst sense of the phrase. The institution actively sought out and marketed its services to high-net-worth criminals, drug traffickers, tax evaders, and corrupt officials. BCCI's criminal services were comprehensive and sophisticated. The bank laundered drug money through elaborate schemes involving certificates of deposit, wire transfers through multiple countries, and false loan documentation. BCCI officers didn't just accept dirty money. They actively advised clients on the most effective methods of concealment. A 1988 undercover operation by U.S. Customs, codenamed Sea Chase, would expose the depths of this criminality. Customs agent Robert Mazer posed as a money launderer seeking banking services. BCCI executives not only accepted his drug proceeds, they volunteered enhanced techniques for laundering, offered introductions to other criminal clients, and actively recruited his business. The Tampa wedding sting operation became legendary in law enforcement circles. Mazer organized a fake wedding in Florida in 1988, inviting BCCI executives and the drug dealers they'd been servicing. When guests arrived for the celebration, federal agents moved in. The dramatic takedown led to over 80 arrests worldwide. BCCI's client list read like a directory of the world's most wanted. The bank served Saddam Hussein of Iraq, facilitating his regime's financial transactions. Manuel Noriega, the Panamanian dictator, deeply involved in cocaine trafficking, banked with BCCI. The notorious Medellin cartel used BCCI to launder hundreds of millions in drug proceeds. But BCCI's services extended far beyond money laundering. The bank facilitated arms trafficking to conflict zones around the world. It handled financing for nuclear technology sales to nations seeking weapons capabilities. BCCI even managed the finances of international terrorist organizations, including accounts for the notorious terrorist Abu Nidal. The bank's involvement in the illegal arms trade was particularly disturbing. Through its network of shell companies and nominee accounts, BCCI facilitated weapons sales that violated international law and fueled conflicts across the developing world. The bank profited from violence and chaos while maintaining the facade of a respectable financial institution. At the heart of BCCI's fraud was a secret operation known as ICIC, the International Credit and Investment Company. Operating primarily from the Grand Cayman Islands, ICIC functioned as BCCI's bank within a bank, a completely unregulated vehicle for the most egregious frauds. ICIC existed in multiple forms with identical abbreviations, holding companies, foundations, staff benefit funds, creating bewildering complexity that only Abedi and his inner circle could navigate. Most correspondents simply referred to ICIC without specifying which entity. allowing top management complete flexibility in how they accounted for transactions. Pricewaterhouse auditors would later discover that ICIC facilitated over $1 billion in circular transactions designed to inflate BCCI's books. The entity was used to hide losses, manufacture fictitious profits, route unrecorded deposits, and provide secret guarantees to VIP clients that they would never actually lose money. The scale of BCCI's accounting fraud defied belief. Beginning as early as 1976, the bank systematically manipulated its financial records. When loans went bad, BCCI simply disguised the losses through parking them with affiliate entities, creating fictitious loan accounts in the names of prominent individuals without their knowledge, and transferring funds between entities before audit dates, only to reverse the transfers afterward. In 1985, BCCI suffered catastrophic losses approaching $500 million in options trading through its commodity affiliate, Capcom. This amount equaled BCCI's entire claimed capital and should have destroyed the bank. Instead, BCCI simply hid the losses through increasingly elaborate manipulations involving ICIC, creating what Pricewaterhouse would later describe as probably one of the most complex deceptions in banking history. The bank employed numerous fraudulent techniques, creating loans to non-existent companies, misappropriating deposits without customer knowledge, selling certificates of deposit without informing depositors, and using the proceeds to cover losses, and maintaining secret managers' ledgers that were essentially untraceable numbered accounts. BCCI's primary strategy for protecting its operations was systematic bribery on a global scale. The bank maintained a corporate policy of bribing government officials, central bankers, and regulators in virtually every country where it operated. As BCCI's Paris branch manager Nazir Chenoy would later admit to investigators, "All the money we got at BCCI, in some way we were breaking the law. The law breaking was pretty systematic." BCCI cultivated relationships with heads of state across Africa, providing them with loans that were actually bribes, ensuring their country's foreign currency reserves would be deposited with BCCI. The bank's web of corruption extended deep into the financial regulatory apparatus of multiple nations. Central bank governors, banking superintendents, and Ministry of Finance officials across the developing world received payments and favors from BCCI. This network of corrupted officials provided early warning of investigations and protection when scrutiny threatened. In 1981, BCCI executed perhaps its most audacious scheme, the secret takeover of First American Bank shares, the largest bank holding company in the Washington, D.C. metropolitan area. This illegal operation would place BCCI in control of American banks while deceiving federal regulators for nearly a decade. The takeover was orchestrated through an elaborate nominee scheme. Saudi intelligence chief Kamal Adham, along with other Middle Eastern investors, officially purchased First American Bank shares through a holding company called CCAH. They assured the Federal Reserve that BCCI would have no involvement except as an investment advisor. It was all a lie. BCCI secretly owned and controlled First American from the beginning. The bank loaned the nominee shareholders the money to make the purchase, taking their shares as collateral, which BCCI management regarded as a sensitive secret. The CIA knew about this illegal arrangement as early as 1985, but failed to inform the Federal Reserve. To front the operation publicly, BCCI recruited two of Washington's most respected figures, Clark Clifford and Robert Altman. Clifford was a legendary Washington insider who had served as Secretary of Defense and advisor to multiple presidents. His involvement gave First American impeccable credibility. Clifford and Altman would later claim they had no knowledge of BCCI's secret control, but evidence suggested otherwise. Both men profited enormously from the relationship, receiving millions in fees and stock profits. Prosecutors believed they were either willfully blind or actively complicit in the deception. The CIA's relationship with BCCI grew increasingly complex and compromising throughout the 1,980 seconds. The agency maintained accounts at BCCI branches worldwide and at First American in Washington. Intelligence officials used the bank for operational expenses and intelligence gathering. By 1986, the CIA had developed substantial intelligence about BCCI's criminal activities. Internal CIA memoranda described BCCI as a radical third world bank involved in money laundering, arms trafficking, terrorist financing, and maintaining a bank within a bank for select clients. The agency produced hundreds of reports detailing BCCI's criminality, yet the CIA shared this information selectively and failed to alert the primary regulators who could have acted. The 1985 CIA report revealing BCCI's ownership of First American was provided to Treasury Department officials who took no action. A 1986 report went to multiple agencies, State, Defense, NSA, and Commerce, but not to the Federal Reserve or Justice Department. When pressed by congressional investigators years later about why the CIA hadn't acted more aggressively, officials provided unsatisfying answers. Some claimed they had no memory of receiving critical reports. Others insisted they had no authority to disseminate the information beyond their immediate recipients. The pattern suggested either incompetence or something darker: protection of intelligence operations and sources. BCCI's tentacles reached into one of the most controversial foreign policy operations in American history, the Iran-Contra affair. The scandal involved illegal arms sales to Iran and the diversion of proceeds to Nicaraguan rebels in violation of congressional prohibitions. BCCI customers included key Iran-Contra figures: Adnan Khashoggi, the Saudi arms dealer who brokered weapons sales; Manucher Ghorbanifar, the Iranian intermediary; and various other operatives in the covert supply network. Some evidence suggested BCCI itself had been used to facilitate arms transactions and move money in the operation. Intelligence sources claim that some evidence about BCCI's role in Iran-Contra was sealed by British intelligence and remains unavailable to investigators. Documents potentially revealing BCCI's financing of nuclear weapons purchases and Iranian arms deals were locked away in the United Kingdom. Critical records remain sequestered in Abu Dhabi. The full truth about BCCI's intelligence connections may never be known, but the available evidence suggests a troubling reality: the bank's criminal enterprise was enabled, and perhaps utilized, by intelligence agencies of multiple nations who found BCCI's services useful even as they understood its corrupt nature. October 1988 marked a turning point. The successful conclusion of the Customs Sea Chase operation led to BCCI's indictment in Tampa, Florida on money laundering charges. 4 bank officers were convicted, and BCCI was forced to plead guilty. The bank paid a $14.8 million fine and promised cooperation with authorities. But behind the scenes, BCCI and its lawyers were working to contain the damage. The plea agreement allowed the bank to continue operating, explicitly stating that only a few rogue employees had been involved, not the institution itself. This narrative was false, and federal prosecutors knew it. Private investigators hired by BCCI itself had warned bank management that prosecutors viewed BCCI as an institutionally criminal enterprise where management encouraged and profited from illegal activity. But the plea agreement gave BCCI time to hide assets, destroy documents, and prepare for the reckoning. One man refused to let the matter rest: Manhattan District Attorney Robert Morgenthau. A legendary prosecutor with a reputation for taking down the most sophisticated criminals, Morgenthau began investigating BCCI in 1989. What Morgenthau discovered horrified him. This wasn't just money laundering, it was fraud on a scale unprecedented in banking history. He determined that BCCI had systematically looted depositor funds, hidden billions in losses, and operated as a Ponzi scheme from its earliest days. Morgenthau's investigation uncovered BCCI's secret ownership of First American and other U.S. banks. He documented the web of fraudulent transactions, shell companies, and nominee relationships. By early 1991, Morgenthau had assembled evidence for what would become one of the most comprehensive criminal indictments ever filed against a financial institution. In early 1991, BCCI's own auditors delivered a devastating report. Price Waterhouse, conducting a comprehensive review of BCCI's Grand Cayman operations and related entities, documented widespread fraud and manipulation, reflecting the general scale and complexity of the deceptions which have undoubtedly taken place over many years. The report, known as Sandstorm, detailed billion-dollar frauds, fictitious loans, misappropriated deposits, concealed losses, manufactured profits, and a labyrinth of illegal transactions designed to deceive regulators. Price Waterhouse described BCCI's fraud as probably one of the most complex deceptions in banking history. The Sandstorm report revealed that BCCI had been falsifying its accounts since at least 1976, nearly from its inception. The losses were staggering, at least $10 billion, potentially much more. The bank's founder, Agha Hasan Abedi, and his deputy Swaleh Naqvi had orchestrated a fraud of such magnitude that it dwarfed every previous banking scandal. Armed with the Price Waterhouse findings, regulators around the world finally coordinated their response. On the 5th of July 1991, authorities in 7 countries simultaneously raided BCCI offices and froze its operations. The Bank of England, which had reluctantly licensed BCCI's London operations, ordered the bank closed globally. The scenes were chaotic. BCCI employees around the world arrived at work to find their offices locked and sealed by authorities. Depositors rushed to branches desperate to access their funds, only to find the doors barred. Within hours, BCCI ceased to exist as an operating institution. In the United States, Morgenthau moved swiftly. On the 29th of July, 1991, a Manhattan grand jury indicted BCCI, Abedi, and Naqvi on 12 counts of fraud, money laundering, and larceny. Morgenthau claimed jurisdiction because millions of laundered dollars had flowed through Manhattan. He announced that at least $20 billion had disappeared from BCCI accounts. The collapse devastated over 1 million depositors worldwide. Small business owners, pensioners, and ordinary families saw their life savings vanish. Many would recover only pennies on the dollar, if anything at all. The human cost was incalculable. Abedi had suffered a debilitating stroke and would never face justice. Naqvi and other top BCCI officials were arrested, but held incommunicado in Abu Dhabi, where authorities refused to make them available for interviews with Western investigators. Many suspected that Abu Dhabi officials were protecting their own involvement in BCCI's operations. Only a handful of BCCI's major players faced significant consequences. Abbas Gokal, who had defrauded BCCI of billions through the Gulf Shipping Group, was convicted in the UK and sentenced to 14 years. Kamal Adham eventually pleaded guilty in New York and agreed to cooperate with investigators. But most of BCCI's architects escaped justice. Even decades after BCCI's collapse, crucial questions remain unanswered. How deeply were intelligence agencies involved in BCCI's operations? Did the CIA and other agencies use BCCI for covert operations while knowing about its criminality? Did intelligence connections shield the bank from earlier investigation? Evidence suggests that William Casey, CIA director during the 1980 seconds, met with Abedi on multiple occasions, though this has never been definitively confirmed. Former CIA Director Richard Helms had connections to BCCI. The full scope of these relationships remains classified. Documents potentially revealing BCCI's most sensitive operations, its financing of nuclear weapons programs, its role in intelligence operations, and lists of political bribes and payoffs remain sealed in British archives or locked away in Abu Dhabi. Some information will likely never see the light of day. BCCI exposed catastrophic failures in international banking regulation. No single regulator had comprehensive oversight of the bank's global operations. BCCI exploited regulatory gaps between jurisdictions, moving assets and liabilities between entities to hide its true condition. The Bank of England, which had licensed BCCI's London operations, faced particular criticism. Documents showed that as early as 1988 to 1989, the Bank of England learned of BCCI's involvement in financing terrorism and drug money laundering, yet took only limited supervisory action. Questions arose whether British regulators had been too accommodating to a bank with Middle Eastern owners. American regulators fared no better. The Federal Reserve approved BCCI shareholders' takeover of First American without adequate investigation. Multiple federal agencies received intelligence about BCCI's criminality but failed to coordinate or act decisively. The Treasury Department received explosive information about BCCI's illegal USN operations in 1985, but took no action. The BCCI scandal established patterns that echo in modern financial crimes: the use of complex corporate structures to evade oversight, the exploitation of bank secrecy havens, the corruption of officials, and the weaponization of the global financial system, all pioneered by BCCI, remain tools of sophisticated criminals today. Money laundering has evolved, but the fundamentals remain unchanged. Criminals still exploit gaps in international regulation, use shell companies and nominees, and seek banks willing to look the other way. Recent estimates suggest over $3.1 trillion in dirty money moves through the global financial system annually, a figure that would have astonished even BCCI's architects. The intelligence community's entanglement with criminal financial enterprises continues to raise concerns. How do agencies balance operational needs against enabling crime? When does the use of criminal networks for intelligence purposes cross ethical and legal lines? BCCI demonstrated the dangers of such compromises. Lost in the geopolitical intrigue and financial complexity are BCCI's real victims, ordinary people who trusted the bank with their savings, small business owners in Pakistan and Bangladesh who lost everything, pensioners in Britain whose retirement funds vanished, workers across Africa and Asia whose deposits disappeared. The liquidation process dragged on for years. Depositors eventually recovered only a fraction of their funds. Estimates suggest about 30 to 40 cents on the dollar for most, and nothing for many. For people living on the edge of poverty, these losses were catastrophic. In December 1992, the Senate Foreign Relations Committee issued a comprehensive report on the BCCI affair. The report detailed the bank's criminality, the regulatory failures, and the intelligence connections. It made recommendations for reform. Some changes followed. International banking regulations were tightened. Supervision of global financial institutions improved. money laundering laws were strengthened, but the fundamental vulnerabilities remain. The global financial system is still too complex for effective oversight. Shell companies and nominee arrangements are still legal in many jurisdictions. Bank secrecy havens still operate, and the temptation to place intelligence or diplomatic interests above law enforcement persists. The BCCI scandal isn't just history, it's a warning. In an era of cryptocurrency, cyberbanking, and instant global transfers, the opportunities for financial crime have multiplied exponentially. The principles that enabled BCCI's fraud complexity to defeat oversight, corruption to evade detection, and international operations to exploit jurisdictional gaps are more relevant than ever. Recent banking scandals echo BCCI. The 2008 financial crisis revealed banks that were too big to fail, but also too complex to regulate effectively. Money laundering scandals at major international banks in the 2010 seconds and 2020 seconds demonstrated that the regulatory problems exposed by BCCI persist. Understanding BCCI is essential to recognizing similar patterns today. The warning signs are familiar. Rapid growth without clear business model, operations in multiple jurisdictions with minimal oversight, cultivation of politically connected clients, and financial structures too complex to understand. When these elements appear, the lessons of BCCI demand heightened scrutiny. In the end, the Bank of Credit and Commerce International was exactly what the CIA called it, the Bank of Crooks and Criminals. For nearly 2 decades, BCCI operated as a full-service criminal enterprise, disguised as a respectable financial institution. It facilitated drug trafficking, arms sales, terrorist financing, nuclear weapons proliferation, money laundering, tax evasion, and fraud on a scale unprecedented in banking history. The scandal destroyed lives, destabilized financial systems, and exposed dangerous vulnerabilities in international regulation and intelligence oversight. It revealed how a single criminal enterprise could corrupt governments, manipulate markets, and evade justice for years by exploiting the seams in our global systems. Agha Hasan Abedi built his empire on a simple philosophy. The only permanent laws are the laws of nature. Everything else is flexible. But he was wrong. The laws Abedi thought he could ignore eventually caught up with his creation, bringing it crashing down in spectacular fashion. The BCCI scandal stands as a testament to human greed, institutional failure, and the dangers of unchecked financial power. It's a story that should never be forgotten, because the forces that created BCCI are still at work in our world today. The only question is, are we paying attention? So happy you made it to the end of this documentary. If you found this documentary interesting, kindly subscribe to this channel and turn on the notification bell to get notified once any new video drops, because we upload new video every week. Stay tuned. Like, share, and comment below. See you in the next one. Bye.